What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 12th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and welcome yet again to another Macro Monday here on the DataDash channel. We've got a lot to dive into today, from doing some general technical analysis on the recent moves in Bitcoin and Ethereum, talking about a long-term path for Bitcoin's price, talking a little bit about the merge, which is coming up likely this week, and also spending some time to talk about the macro perspective and where everything is starting to play. If you guys have the time, I recommend you stick around for this episode. We've got a jam-packed episode today, so let's go ahead and kick it off. And if you enjoy the episode, consider dropping a like. Now, before we dive into some of the long-term perspective stuff in the macro picture, we got to talk about the short term. As you all know, if you follow the Macro Monday specials here on the channel, we showcase our technical analysis through Coin Panel. And this is where you guys can start to see my weekly updates for technical analysis. You'll see them live as we potentially update them throughout the week. So far, we have not touched our prediction here since back on August 29th. We had called for the short-term correction down towards the $18,800 area after breaking through our 200 EMA and 200 MA on the 4-hour time frame, and also as well facing resistance at 21,700. As you all can see here, that's exactly what started to play out here. After we broke down here throughout our moving averages and that resistance range, we came down to 18,000, actually a little bit below that range, around 18,500. But we did talk about a very important point. We did not walk in to this retest here of 18,800 bearish. We in fact walked into it bullish as we had a deviation from the low range. What does that mean exactly? Well, similar to how we had highlighted back here in the past, when we deviate below the trend and come back into the accumulation channel or the consolidation channel for price, that's usually when we're going to see some upside here. That's when you had maximum short sell pressure from retail participants, most likely, as it tends to be, and of course, market insiders take advantage of that. Now, we didn't set any specific targets about where price would go to, but we did expect some kind of major bump up in price. And while I think there may be a little bit more steam here, as Bitcoin seems to have been able to make the 200 MA as new support here, at least in the short term, I think that a good range to potentially retest is 23,000 to 23,500. So we've likely seen the majority of this optimism so far. Now, a lot of this is coming off of the backs of an event we'll talk about later, MicroStrategy, potentially acquiring another $500 million of Bitcoin through a stock issuance, and along with that, some optimism around the merge. But I want to go ahead and talk about one key significant factor here. Not only do we need to talk about Ethereum, and while it is, again, back above the 4-hour 200 EMA and 200 MA, similar to Bitcoin, we need to talk about the difference in performance here. It is very clear that Ethereum and Bitcoin are on two different playing fields right now. And we should be seeing Ethereum going into this event at a minimum outperforming Bitcoin. We are not seeing that here. So let's go ahead and dive into some of the important charts here. First off, the ETH to BTC ratio, definitely starting to look weak here. I'll talk a little bit about why that might be, or at least the argument that a lot of people would make about why this is normal that we're seeing the ETH to BTC ratio declining. But the fact of the matter is that Bitcoin is chartering much higher and much faster than Ethereum here off of the recent low retest around 18,800. Ethereum, on the other hand, is still not been able to set in a higher high since back here in August of 2022, back on the 13th of the month. So we've been nearly an entire month now since setting in a new high here, having a significant breach of the 200 EMA here. And on top of that, if we take a look at Bookmap, just analyzing Bitcoin here, we need to understand what's been happening here with price, right? Why is it here that we are seeing such a significant rebound? Well, it's because we've got the cumulative volume delta here. We've got buy-side pressure coming in, neutralizing the significant market sell-side pressure we had back here on September 6th. So looking back over the past week here, right, when we got that retest down here from $19,700 down here towards $18,500, we had a lot of market sell-side pressure. But it's important to understand the difference in dynamics between market sell-side pressure, the cumulative volume delta, or buy-side pressure as well, generally market order flow, people buying or selling at the best available price, right? Usually FOMOing in if they're buying or capitulating in their sell side orders, and the opposite of the order, which is the bids and the asks, those who have limit orders on the order book. And just how important it is to understand these two different dynamics and to track them. Because while we track cumulative volume delta, and we did see a significant decline across all various order books, across Bitstamp, Bitfinex, Coinbase, Pro, FTX, Kraken, which is something that Bookmap aggregates here, we could see that there was a lot of bid support ready to buy on these sell side orders. You can see these white lines here, right? A lot of bid side support here, holding up price, providing support. Now, on top of that as well, if we scroll up here over time, we can start to see that while there hasn't been much resistance, many asks on the order book willing to sell Bitcoin, we are starting to get into territory that's a bit brighter here, essentially meaning that we've got more ask resistance. We're going to need a lot more market order flow to clear through that. And we've already had a significant amount here, taking us from negative 13,000 on the CVD all the way up here to 680. So it is important to keep that in mind here when we're considering that Bitcoin has not only already seen a lot of optimism here, a lot of market order flow, but it's going to need to go even further than that to continue up to 23,000 and, as many people are starting to hope for, start off the new bull market. I again am in the camp here that we do not have enough optimism yet. Just because, as we take a look at our macro indicators, the stock market's taking up a little bit higher, everyone's excited about the merge. These are the typical things that can catch people off guard because they deviate people away, no pun intended, from the fundamentals. There is still a lot to be concerned about when it comes to the order flow that would be needed to actually drive a full-on bull market. And it is usually going to happen from a wave of capitulation. We certainly did see some back in June with the restructuring of a lot of these companies, a lot of the bankruptcies that were filed, but it is important to understand that it is likely going to be a long period of time, even if that was the capitulative lows, before we really get a significant trend reversal. So no matter which end of the stick you're on, right, whether you think this is the bear market lows that we saw back in June, or you think we have lower to go, no matter what, we should have a prolonged period of time before we really start to see a major move higher. And that's why there's no need to rush into these lows. That's right, there's no reason to go all in trying to pick a low, but rather just simply perhaps start to dollar cost average. Now, one thing I did want to emphasize to you guys here as well, if you guys haven't already, definitely recommend checking out CoinPanel. That's where you guys can get access to my weekly TAs when I update them. And we'll put the date there so you guys know when we have updated them. I'll always try to be as transparent as I can on that. And on top of that, definitely check out Bookmap if you guys are going to get access to multi-book, which we're looking at. It's really valuable if you learn how to utilize it in order to understand the market order flow, start to look back over time, look at the heat map and try to understand where the bid and ask resistance is, because these will act as dynamic support and resistance for price. If there's a lot of bids on the order book, you're going to need a lot of market sell side pressure to clear through that. So on top of that as well, you also need a lot of buy side pressure to clear through any resistance or asks on the order book. Now, we've talked about the kind of short-term things here, and we'll dive into some of the news headlines, right? Which I think actually might be good to kind of chat about here. Why also are we seeing this kind of move up in Bitcoin versus Ethereum? First off, we've got the move in MicroStrategy's recent announcement that is going to be issuing up to $500 million of stock to fund more Bitcoin purchases. This obviously got a lot of bulls very excited. $500 million of buy-side pressure is $500 million of buy-side pressure. And in this market, which has been relatively, stagnant in volume when we're talking about real dollar-weighted volume, this is definitely very exciting to a lot of investors. But again, I want to emphasize here that MicroStrategy has a very infamous history of just being passive and simply investing into Bitcoin. And while that's great, dollar cost averaging can be good, MicroStrategy kind of leaps forward a little too quick. Instead of just simply doing routine dollar cost average purchases, especially into fear, they tend to do it when there are signs of optimism. And again, in most markets, that usually is good when you're buying into market leaders, but Bitcoin has been a market laggard here over the past couple of weeks and months. In fact, it's a simple fact. We are still so far in a negative environment here. But again, $500 million of buy-side pressure is $500 million of buy-side pressure. That's why in the short term, we've seen one of the nicest weekly candles here for Bitcoin we've seen in a long period of time. An over 10% candle move like we talked about in our previous video. Now, there is another dynamic here that we need to talk about for the Ethereum merge that a lot of people have not considered yet. which is that with the merge, there's likely going to be a second token. Now, this is the argument that I think a lot of bulls are probably giving for Ethereum as it goes into the merge. Oh, Nick, you're being too bearish on Ethereum because, as some of you may remember, back in 2017 when Bitcoin Cash came into circulation off of a fork of the Bitcoin network with the implementation of SegWit, which is one of the network upgrades for Bitcoin. Essentially speaking, Bitcoin had actually started to sell off, essentially, when the network fork started to come out, essentially due to the fact that people were getting a portion of value through Bitcoin Cash. Essentially, if you had one Bitcoin, you got one Bitcoin Cash. And that Bitcoin Cash had some market value. So Bitcoin started to correct, essentially. But that was after the fork here. That's a very important thing to understand. Essentially speaking, once people got the forked coins, you started to see this correction or valuation change where altcoins started to bounce back up. Bitcoin started to sell off as people were betting that Bitcoin Cash might be worth something, and the market starts to become a bit more rational with its valuations. Essentially speaking, though, I want to go ahead and emphasize one key thing here, which is that if you're betting on the Ethereum proof of work coin being worth something, all the while I don't want to say it couldn't happen. Maybe when there's the actual network upgrade goes live, maybe this changes. But a lot of the exchanges have started to give IOU notes for Ethereum's proof of work coin, essentially this fork off separate network of the core Ethereum network, which is going to be moving to proof of stake. And so far, the market sentiment for those who have received these IOUs has been quite negative here. So we've been seeing people, as per usual with forked coins, just going ahead and dumping them due to the fact that in this market, people are going to take any liquidity. They're going to take any potential opportunity to sell their existing positions that they don't really care about, or that are too speculative. And this is, again, another sign here that we are not in a bull market. We should expect this to be much stronger in price performance if we're really in a bull market right now. Plain and simple here, right? Just following what the market order flow, what the market itself is telling us. And I want to spend a little bit of time now to talk about the long-term roadmap for Bitcoin, right? Now that we've gone through some of the macro events and the short-term TA, what could realistically play out here? Well, I think a lot of people don't take the time to zoom out here. So many people are focusing on the 1 hour time frame, the daily chart. I want to take it to the weekly, and I want to look back over the past couple of years at some significant levels that we're watching. The 4 key levels of resistance or support that we're watching are $25,000, around here $19,000, $14,000, and $12,000. Okay. Now I'm just going to go ahead and highlight here that if we get Bitcoin down at this range at 12,000, we're going to be buying like crazy. I don't think we're going to hit this range. I think this is potentially a little too pessimistic, right, for Bitcoin's price. What I think what's really going to happen here is that Ethereum, all the way down to the smallest altcoins, are going to get really hit. I think Ethereum will hold up, of course, much better than most altcoins. But essentially speaking, there's going to be a big liquidity correction and valuation correction in the market that starts to bring dominance back in to mainly Bitcoin and also Ethereum, established plays in the market. But with that, I don't think we're going to have the full sell-side capabilities. And if we do, it's going to be for a brief moment where we actually go down to 12,000. What the levels I want to watch here really are around $14,000. And where I think we could start to go over the next couple of days and what could happen. There's also one other significant upward trend line, which is the line of support that's been holding since back here in July of 2017. I think this will be temporarily broken, as we saw back during the March 2020 correction, but for a brief moment, realistically actually being held in the grand scheme of things and just simply going through a deviation. I think that is what's going to play out on the chart. If we take a look here, we're starting to get another upward tick, a potential retest here of that line at 25,000. And while I think many people are assuming that we're going to come up to this range at 25,000, I think that we're going to start to, again, set in a lower high, so show some sideways consolidation and start to clear through here and have a sell-off going into November, testing towards that range, deviating back up, getting back in there, and potentially accumulating sideways again through a wider consolidation range from around here at the capitulative lows at $18,000 that we saw back in June and at $25,000. Continuing to zigzag between that line of support and eventually setting the foundation to break out higher once Federal Reserve monetary policy starts to become a bit more clear. This to me seems like a very realistic set of expectations. Considering the macro environment, considering the liquidity flows, there just simply isn't a lot of buyers here. And that's exactly what we saw during the last relief rally. It's people taking advantage of retail traders and speculators here, people who are going way too short at the times they shouldn't be going short and squeezing them out of their positions, and then starting to distribute on those who start to FOMO back up at these ranges, trying to make the trade before we get a real trend confirmation. It's time and time again how market participants get screwed over by the larger guys in the market, the big institutions who know how to trade off of your emotions. Now, I want to emphasize some of the key things here. One of the biggest models that I always turn back to, you guys know through our partner tool, CryptoQuant, is the net unrealized profit or loss. Essentially speaking, when we look at the Nupal model, it allows us to understand how many market participants out there on chain, roughly speaking, using unspent transaction outputs on the Bitcoin network, how many people are in profit or in loss territory. Now, we've started to see a bounce back into green, again, getting a lot of people optimistic like we saw back here in August. So I just want to go ahead and emphasize here that August should already be a guide here to showcase that, well, it's not good to get optimistic too early here. A lot of people start to see us getting back in the green. We're in the blue for a while. But what I think a lot of people aren't thinking about is that we were only in here for a brief period of time. And as we've seen here, when we retest the blue line and come back into green, we usually have a retest back down into blue territory. In the more recent bear market in 2019, that was a bit different. Same here with the March 2020 correction. But the important thing to understand here is that we have not had a macro bear market, a 40, 50, 60% correction in equities since Bitcoin's creation. We don't know how Bitcoin is going to handle in this environment. And I would say at a minimum, you are going to see Bitcoin come down into previous Nupal territory like we've seen in some of these bear markets back from 2011 or 2015. At a minimum here, I think that is a conservative ask to see Bitcoin doing that. And that is likely going to be your telltale sign for Bitcoin to come back down into $14,000 territory, even if for a brief moment, and then coming back up maybe to $16,000, $17,000. I think we need one capitulative outflow. Some bulls will argue on market indicators or data science models like the Plel multiple. Another one you can get here through CryptoQuant, right? We can see here we've had the decline come into this range, the green buy range, but again, important to understand here that even though in the past this has been more of a brief indicator here with market bottoms, right? We should expect at a minimum, looking at previous bear markets, a retest of that lower range. And it's important to understand here that this is speaking to a much bigger degree of sell-off when you're not just in the green territory, but coming down to the lows of that channel, that green channel there. So I think that we've got a ways to go here. And if you guys want to get access to a whole range of data science models, definitely recommend you check out CryptoQuant. It's one of the many kind of 3 to 4 tools that we utilize here to try to get a sentiment read on where the market is heading. And I think that they're one of the best qualified platforms in the space. They also have some great reports that come out. So you can definitely check out the different tiers at the link down below in the description. But taking it into the final conversation here, the macro perspective, what's going on here? Markets have not opened yet. We're taking a look at the futures here as we usually do. Futures are up here on the S&P 500, up 0.44% as we've got a positive cross here through on the RSI, and buyers have taken upon the opportunity to buy the dip here since early September. And on top of that as well, we've got a similar trend here as well on the NASDAQ. We're starting to see that the NASDAQ's turning higher. But I want to go ahead and emphasize one big thing here, and this is something that we talk about within the Dash report. You guys will be able to get more details on this in this recent article, the recent edition that we put out this month for September. We talk a lot about market leaders. Now, if we are stepping into a bull market, yet again, we need to find market leaders. We need to find those that are setting in new 52-week highs, who are really leading the way forward. Essentially speaking, we need to know that there are going to be some who are already starting to tick up even in fearful territory. And the big red flag here is that we essentially are having a lot of the big tech stocks underperforming the majority of the market. All right. Now, again, we have some ways of tracking this. We've been talking about it for months now, how they've been underperforming. And even some of the market leaders like Apple are really not keeping up here with the optimism of the market. And that is a big worrying sign here that this is probably yet again another fake rally here. Again, things do not move in straight lines. If you take a look back at any of the previous bear market corrections here that we've been in since back here in November and December, right, we've had some nice rebounds here in price, right? We've had them many back here during the first bear market correction. We had 2 as well here back here in May of 2022 and the later part of May going into early June, right before another flash sale in the market. Just watch and wait to see what happens when we get up towards this line of resistance here. A lot of people are not watching it due to the deviation here. People like to follow direct trend lines, but we keep those on our chart here because we saw a clear deviation here, and it is going to have to be a difficult challenge for equities to clear through that range and to see whether or not that if we even break through, that it's not just another deviation, right? We need to be able to make that line of previous resistance new support for the bulls to actually start to showcase that they are in charge here. We need to see price starting to have multiple retests and whipsaw higher here, breaking past the previous relative high to really showcase that the bulls are back and that the bear market is over. And we know a lot of people are championing that, hey, Nick, the dollar is starting to look a little bit weaker here. Commodity prices have started to go down. What's your take on that? Isn't that a sign that the bulls can start to take back control when it comes to equities and crypto prices? Well, let's take a deeper look at it. Well, on the weekly time frame, the Dixie has gone down a little bit. Its relative high recently was 110.8, and now it's down to 108.25, basically where it was back here in late August or here in early mid-July. Right. Well, the Dixie hasn't been making massive grounds here, probably due to the fact that monetary policy didn't change too much throughout the summer here. As other market participants have started to follow a little bit in the Fed's footsteps. I want to go ahead and just zoom back out 20 years ago when we were in similar territory here, right? So this is over 20 years ago. We're taking a look at the Dixie, right? Now, I want you all to take a look at the chart here and tell me what you see here, right, as we started to approach the top here towards 120. I don't know about you guys, but the big observation that I'm making here is that the Dixie, as it was trending higher, didn't move in a smooth straight line. It had many times where we went from, for example, 119 down to 108, and then 108 back up here to 121, and down here to 110, and all the way up to 120. And throughout this entire period of time here, right, this is a period where equities were getting obliterated here. Tech stocks were starting to crumble as dollar liquidity dried up, and there wasn't as much credit expansion in the economy. There was even also minor corrections here, back here from April of 2000 down here towards June 2000. So these happened over a multitude of months here. And essentially speaking, even if the dollar starts to correct here over the next week or so, or the next couple of weeks, it doesn't mean that we've got a market top here. Finding tops in the dollar can take time, and they usually are likely going to come. If history is telling of anything, it's going to come through multiple retests at a similar upward range. If we just simply look back at history, the dollar index can climb to much higher levels than people previously thought. And right now, if we just simply zoom out, all those little blips or those corrections that people are so excited about here in the dollar index, potentially proving that the Fed might be getting inflation under control, it just simply doesn't look like it's the case. And to make matters worse, again, as we're zooming out here and focusing on the broader picture, oil, which had its major decline here, about near 5.5% move here back on September 7th. A lot of people got real excited. Looks like we're deviating back in above that previous range of support. And if it gets a close above this range, I wouldn't be surprised if oil goes back up to $97 very soon. $95, $97, similar to back where we were here in August. And if that is able to close above that range for the daily close, this is speaking towards a much bigger breakout higher. Take a look at natural gas as well. Natural gas had another big sell-off here at 8.5% move down in price. After that, price is holding out here. In fact, at higher lows than where we were back here on August 8th. Now again, I'm not trying to be too bearish on this, guys. I want to be neutral about it. Don't want to set my opinions in stone just yet, but we cannot get too optimistic about this. We can't use a single day's worth of decline as a sign of optimism. Same goes with any kind of upward move in one day. We need to look at the broader trend. We need to zoom out and see that we are still well within the trend here. We have not showcased any significant signs in the long term that inflation is done with, that the Fed has absolute control on it. Because right now we are testing towards some very significant ranges here. And it's an important step in your technical analysis, your market analysis as an individual. Not just to listen to me, but to do what I'm doing, which is to look back, zoom out, and see whether or not the trend has actually been broken. And so far, we have not seen any significant trend changes. This is why, again, we are still bearish on the next coming weeks for Bitcoin, even with the short-term bump. Same goes with Ethereum into the merge. The same goes with equities. And we are only really bullish or long here on commodities. Or not, we don't have any positions per se in commodities just yet, but we do believe that commodities do have a chance here to continue trending higher, because that's what the trend has been telling us, especially when we zoom out on the long term. Anyways, guys, I've rambled on a good amount. If you enjoyed this video, one of the best things you can do is drop a like, share it with a family member or friend who's looking for some navigation in the markets. And on top of that, a great way you guys can support the channel is by checking out the links down below in the description if you want to use any of our partner tools. We've got some great discounts for tools like Bookmap and CoinPanel and CryptoQuant. And on top of that, you guys can always check out the Dash report. It's a great way to get a macro update across the board on all the different markets that we track here on the channel. But I've rambled on enough here. Thank you all so much for listening to me and giving me some time out of your day. Until the next one, I'll see you all in the next video. Take care, everyone.